Streaming now, this is the Wood TV Live Desk.
And good afternoon, everyone. Phil Penarski here with the Wood TV Live Desk. Hope you're having a great day so far. We are starting to really hit the season of giving. It's right around the corner, but that doesn't mean that you can't also try to save your money while you're trying to be generous. We're now being joined by Tom Demeester with Greenleaf Trust in Grand Rapids. Tom, thank you so much for being here. You're here to kind of touch on a couple of things, really, how to, one, avoid these holiday scams that we've been talking about, and also how to properly use the annual gift tax exclusion. So very excited to get the chance to talk to you.
Thank you, Phil.
Yeah, absolutely. And, you know, first off, I do want to touch on the scams. I feel like we hear about them all the time, especially around this time of year, about how scammers are kind of trying to find new ways to get you to fall into a trap and, you know, lose some money. And, you know, just in particular with these scams, what are some of the things that people should be kind of keeping an eye on? You know, we hear the typical things, double check a lot of the emails and calls that we may be getting, but is there anything in particular that people should really be kind of watching out for this year round?
Well, I think it is as practical as you think it is, although, you know, most of the time these requests come in and they're tied to a compelling story, or there's a charitable need that's being expressed. It might even be disaster relief that is being identified, and all worthy and oftentimes very legitimate needs. And so we as a society desire to give and support. The challenge can be that, as the term is used, scam, is often individuals prey on that. So very practically, whether you're receiving, let's say, a phone call where that request is being made, or it's an online solicitation, the number one thing you can do is really vet the opportunity. In other words, if you can get the name of the charity, have them identify specifically if they have a website or if you are on a website, and do some due diligence around that. If the ask is immediate and you're being requested to give on the spot, that often is an indicator that it may not necessarily be a cause that you should be thinking about. So when you think in terms of vetting the opportunities, there are websites out there. The Consumer Affairs of the Federal Trade Commission, for instance, has a landing page for charities and giving for what they would identify as scams. And there are ways to go out on websites that they identify and evaluate these charities, determine if they are actually 501c3 qualified entities, or they may not be. They may be coming at you through social media, a crowdfunding site, maybe a GoFundMe page, which again can be legitimate ways to provide resources, but asking questions is the key, and just delving into what that entity might have on a website, or whether they have an EIN number assigned by the IRS, that can be checked. Another very simple thing that can be done is Google. You can go out, identify the charity, and Google by associating the term scam or complaint or review. It is remarkable how often the commentary out on the internet identifies these issues that are not legitimate. And so it is one way that you can think that through and research or document what that could look like.
Mm-hmm, absolutely. And of course, it's going to happen either way. Scammers are going to eventually find somebody to fall victim. Unfortunately, they have gotten a lot craftier over the past couple of years. But so if you do happen to fall victim to one of these scams, what's sort of the best way to go about either reporting it to the Better Business Bureau, maybe even contacting your local police department?
Yeah, both are, I think, legitimate ways to think about an issue of that type. Certainly the Better Business Bureau or your local police department. If you have fallen victim to, let's say, a crowdfunding, a Kickstarter, a GoFundMe, and have determined that it was not legitimate, each of those entities have a complaint division within their online presence that you could identify. The Attorney General is also another way that you can reach out and provide, especially if there has been just more than yourself involved in this. If it is something that has been detrimental to the public, in general, the Attorney General's office is often familiar there. One way to protect against that, and hopefully if you, for instance, have donated by credit card, you are able to reach out to that credit card company, identify potentially the fraud issue or a source of complaint. Many of the credit card companies would follow up on your behalf and evaluate the legitimacy of the charge, which is again a benefit of using a credit card to donate if you're doing it either online or over the phone versus gift cards, cash, money wires, which are often what are asked for in this setting.
And Tom, kind of shifting gears a little bit, and I do want to remind everybody watching that for anybody that maybe has concerns about scams or potentially wants to know how to report one, you can definitely find a list of helpful tips right now over on our website, woodtv.com. But Tom, switching gears over now to the annual gift tax exclusion. It's a topic that gets a lot of attention, especially around this time of year when people are giving out those gifts. And a lot of people may be familiar with it, but some people watching probably aren't. So we'll just kind of give it to us straight and kind of explain it as briefly as possible what exactly the gift tax exclusion is.
So when we reference an annual exclusion for gift tax, that would be an amount that you can contribute to what in this case would be a non-qualified charity. So could be friends, could be family members, individuals where it is not a qualified 501c3. This year, that amount is $17,000 per person, and that amount can be given without triggering a requirement of filing a gift tax return or paying either the recipient or the donor any tax associated with that gift. So oftentimes it's used with family members where a gift might be made to a family member and it's done on an annual basis. That amount's increasing to $18,000 next year. And it can be combined if, for instance, a husband and wife desired to give resources to family members or outside. Each of them have that this year $17,000 annual gift tax exclusion. It is a use it or lose it. So within this calendar year, if the aggregate amount given in that setting to any one person is at that 17 or below, you would not trigger a requirement of having to file a gift tax return. It's often used in connection with estate planning. So ideas, concepts, structures that can be put in place. Sometimes that annual exclusion gift is used for either funding vehicles or sometimes for giving. If maybe there is a mortgage that is out there between two parties and the interest in any given year accumulates, it's possible to forgive that interest up to that annual exclusion amount. And again, neither then have to recognize that that gift was actually made.
Mm-hmm. Right. And Tom, you also did mention a lot of great recommendations in that piece as well. So you kind of answered my next question, but it kind of leads us now to sort of the end, really, of this conversation. And, for people watching, they've probably got a couple of other questions regarding how to really maximize their dollars, especially during the holiday season when they're shopping in the grocery store for big family meals or buying gifts for their family and loved ones. Do you have any final financial advice or tips really for people to really stretch that dollar out and really maximize it to its full potential?
Well, certainly the concept of tax or tax efficiency is important when you're attempting to leverage, whether it's a gift to a charity, gift to family members, anytime you can be efficient in that regard. So if, for instance, an individual does not itemize their deductions on their personal tax return, there is a limit to which they can give, but either working with their accountant or an online software that they might be using to prepare their returns. You have a calendar year allocation that you can maximize that giving. So that's one way to be efficient because, again, giving to a qualified charity, taking a deduction reduces what otherwise would be taxable income to you, which just leverages that gift up. it would be the same way with using an annual exclusion gift. If doing so efficiently eliminates the need for filing a gift tax return or increasing kind of the cost of that gift, that tax efficiency is always an efficient way to think about it. In addition, there are assets, things like stock that you may own in an account that you have control over, where maybe it's a very low basis. You acquired it for a very low price, and over years it has accumulated or it has increased in value, so that if you were to sell that stock position, you would have to pay capital gains on the gain from the point at which you purchased it to the sale price. Well, you can donate that to a particular qualified charity. They, as a nonprofit, won't have to recognize that gain, and you get the benefit of the full value of that particular stock that you've donated. So that's a simple way that thinking through your year-end strategies. Another might be for an individual that has an individual retirement account that has a required minimum distribution. You can do a charitable distribution in lieu of what is called an RMD for that individual. And it really is quite efficient because a distribution from an IRA is taxable at their personal rate. However, if it's distributed for charitable purposes, you don't pay that tax. So there are a lot of small ways that you can think about efficiency. And as we all know, the markets move sometimes very efficiently, but other times very inefficiently. To be paid, we can get ahead and leverage the benefit of that gift.
All right, Tom. Well, again, we really do appreciate you stopping by. And one last time, as a reminder for everybody watching, that if you've got any questions on really how to maximize that bottom dollar during the holiday season, or you're trying to avoid scams, or maybe you want to look a little bit more into the annual gift tax exclusion, you can find all that information right now over on our website, woodtv.com. Tom, one last time, I really appreciate you stopping by today. We really did enjoy getting to learn a little bit more on the business side of things, and also being able to help everybody out during the holiday season.
Thank you, Phil.
Absolutely, and I want to thank everybody else for tuning into this latest edition of the Wood TV Live Desk. I'm Phil Pinarski. We hope you have a great rest of your day.